It's an enabler.
Right.
It's an enabler. And I think that's, if you think of it in that context, and that also, it's important to have a plan. It's important to be flexible enough to change the plan, but it's important to have a plan.
Absolutely.
And I think that it's, I think that there's never a time when you're really too young to start to do that. I always laugh because people say to me, in 1968, when you graduated from college, how did you ever decide that you were, how'd you decide that you wanted to get into the, financial business? And, how did you plan your career? Well, I wouldn't exactly call it a plan. I wanted to be financially independent. And that meant that I wanted to make it myself.
All right, so welcome back, everybody. I'm Matt Rosenthal, and this is Digging In. So if you're new to this show, what I do is I dig into what it takes to be successful in business, life, and health. And today's show is going to be cool because I think it's a little bit of each. Even though we're talking about finance today, it still has a lot to do with how you feel and your health. So it's going to be really awesome. The reason I do this show every week is because I want to inspire and motivate you, and I want you to reach your potential. So for me, this is my way of paying it forward, of giving back. There were people that did this for me. And so this is the best thing I can do to take what I've learned and bring people on who've made tremendous mistakes and they've learned from them and they've become successes in their own right. And so today's show is, again, it's going to be phenomenal. Before I get into it, one thing, please hit the subscribe button down below. Let's help as many people as we possibly can. And with that, let's jump into it. So I'm excited to have Adele Weisman with me today. Adele, so first of all, I happen to find you to be very inspirational. Having heard your story, having talked to you a little bit about your background, but just knowing what you've done, I mean, to me, I consider you to be self-made, and you've built a business that certainly anybody can be proud of, and I'm sure you're very proud of it. I think you're a proven entrepreneur, and you're a wealth of knowledge in the wealth management business, no pun intended. So, you have a long background, but I'm just going to highlight that you joined Roanoke in 1981, and you've seen so many market cycles, you've seen the ups and downs, and you've guided so many people along the way. And I know that you're responsible for co-managing their flagship growth product, which you're going to talk about. Just a little bit more about your background. To me, I would say you're an expert. You might not agree, but I'm going to use the word expert in financial planning, finance, credit, employee benefits, and of course, wealth management. So with all that being said, I want to welcome you and thank you for being here today. It's an honor.
Thank you, Matt, for having me as a guest. So, just to fill in, I got into this business in 1968, which is so long ago that most of you can't even do that math, fortunately. And it was a very different time. We were barely doing 1,000 shares a day on the New York Stock Exchange. Anyway, I've seen the financial markets and certainly the global market evolve over time. It was very much a domestic practice when I got into this business, and it was very much a business of picking stocks. That's what people did. They just made investments. There were in US, in domestic equities or bonds, there were very few people and very few companies that looked beyond our US national borders. Well, fast forward 50 years and we're in a very different global world. The issues that I had 50 years ago as a woman going into the financial business have changed dramatically. Women have made huge strides socially, politically, and some strides financially. But the fact is that in our social construct, it is still, for the most part, men who manage families' wealth. And part of what makes me tick is that I want that to change. It has changed some, but I want it to continue to change so that women become empowered in the financial world, just as they've become empowered in the political world and in the social world. I think it's there's no rocket science to this. There really isn't.
Wait, are you serious? I thought there was.
There's no rocket science here. But it takes a bit of focus, and it takes a lot of knowing who you are and what you want. I joined this firm in 1981, and we have built a practice that caters to families, to foundations, and to, in some cases, not families, but individuals. It is very much equity oriented in terms of the investments that we actually make. But in terms of the advice we give our clients, we have tried to build a holistic practice, which means that we look at the whole picture. And it's in the context of the whole picture that we understand how the part that we run is best suited to the client's needs.
That might be a good place for me just to jump in, because there's something that I saw on your company's website, and I think it's really what you're saying. It said, "Dream it, build it, grow it," and that's a culture, right? So when you're talking right now about a holistic approach, I mean, I feel like it's like a feeling.
It's exactly a feeling, and it's why we think of ourselves as growth stock managers. And that's it. Growth stocks. Growth it's a label. It's semantic. But the fact is that we are always looking forward, and we're always investing, not for today, but for tomorrow.
Right.
And from our point of view, any investment plan, even the most conservative investment plan, should always be thinking forward. And interestingly enough, as we get older, and I have some experience with this, as we get older, we start to think of what we've accumulated as belonging to the next generation. So on the one hand, we've gotten older, and by conventional definition, we should have gotten more conservative. On the other hand, if we start to think that this is legacy, that this really belongs to the next generation, it forces us to continue to think forward.
That's really brilliant. I just got to jump in, because I'm gonna be 49 in December.
Oh, you lucky fellow.
And I do think differently about things now. I have a 13-year-old and a 10-year-old, and I've built something to a certain point, and I mean, by any standards, I have enough. I don't need any more, but I've worked most of my life to get to that point. So now I do think a lot about, wait a minute, what do I do from here? And in my mind, it's really about like a legacy. I just bought a rental property. So I'm not buying it for myself. And in my mind, I'm buying it because I intend to keep it and to do something with it, that it gets passed down. But as you're saying, I made a mistake the other day. I timed some Bitcoin wrong, right? And I'm down like $20,000 in 24 hours, right?
That's not a mistake.
I didn't sell it yet. But as you're
well,
talking,
then it's
I'm like,
really
wow.
Not a mistake. It's never a mistake or a victory till you close the trade.
I'm not going to close it. But as you're talking, I'm like, well, I just thought to myself, wow, if I was thinking of it from a different perspective, because I'm a risk taker, right? I could have looked at it differently and said, well, maybe it's about my kids. And if it's about them, But what happens in the back of my mind is I'm like, well, I could just make 20,000 more.
Yeah, but so Matt, you know what? I get this. So already I know a little bit about who you are. You like to trade. And, you know, there's a place for that. First of all, it keeps you interested.
And I have no idea what I'm doing, by the way, whatsoever.
That's a separate discussion.
It
But
is.
but in any case, you know, and trading, by the way, for some people is what keeps them interested. It keeps the adrenaline running, keeps
That's
them
why I like
watching,
it.
keeps them observing.
Yeah.
And it's an important part of an overall investment approach. If that's what keeps your nose to the grindstone, if that's what makes you watch everything. But the real money is made by making great long-term investment decisions.
Wait, don't go there yet. Don't go there yet. I'm not ready.
Okay.
I want to say something before we go there. So everybody who's watching this, hang on, stay until the end, because Adele's going to share 4 keys to passive income and financial freedom. And as she talks about the long term, I'm sorry to interrupt you, but I had to let everybody know, stay, because you're going to give some really good information. And as we talk about the long term, there's so much we can talk about, right? So just take us through it slow, because it's like a mindset, right? We're all tempted to take risk, and there's so much to consider, but you're right. It is like ultimately the long term. So what do you mean by long term?
Okay, well, this is sort of an interesting, I mean, what's long term? Okay, so it's certainly longer than a day. It's certainly longer than a week. In my experience, the best investment decisions, I'm trying to decide whether I want to take this down to a stock level or do it at a more general level.
Let me just say one more thing before you go there. Anybody who's ever watching this, we're having a conversation. Adele is not giving any financial advice. Whatever she says, it's just her experience, and it's one person's perspective. So anything we say, it by no means should you take this as advice that we're giving to anybody when you watch this. Okay, now go ahead.
Right. So here's what I think. I think it's very easy to get caught up in the action. It's like standing at a craps table.
Oh, I see what you mean by action. Okay.
You really want to be part of the action.
Right.
You know, it's like before you turn over the hold card in poker or at a blackjack table, the action, the adrenaline it's
like the anticipation, like what's about to happen.
Right. The only thing better than that is falling in love.
Right.
You know, I mean, it's just irresistible.
Yeah.
On the other hand, there is implicit in that is a volatility that feeds right into our emotional weaknesses, which are that we get greedy at the top and we get scared at the bottom.
And we make decisions backwards?
And we do. And so if instead of having that kind of a horizon, which is the next throw of the dice, you have a longer term horizon, and you think about making investment decisions like you've just done, Matt, with buying a building. I mean, that's not a short-term decision. That's a long-term decision by the nature of real estate. Right. But the fact is, when you buy stocks and fixed income and lots of other kinds of publicly traded vehicles, and even more so privately traded vehicles, okay, you're making a long-term investment. And so what you're looking at is what's the potential over 3 to 5 or 10 years, whatever that time horizon is that you choose. and what the price you're paying now looks like relative to that potential going forward. And that, by the way, is the essence of growth stock investments. It's what allows us to pay 10 times revenues for a small, or 20 times revenues for a small company, because we can project out and see that over 5 or 10 years, that will turn into a very acceptable multiple of not revenue, but of earnings, because that company will become not just a revenue producer, but a real profit producer.
And it's also the opposite of the craps table. So you don't get the adrenaline rush, and you need, I'm hearing you say that you need patience, and you need to do what you said early on, which is see the bigger picture. I heard you say that in some way.
Right, and you need to have the discipline to actually sit down and do the work.
Yeah, I'm glad you brought that up.
Now listen, I suspect that before you bought Bitcoin, Matt, you did a lot of work. Because, well, maybe you didn't. I know lots of
I've been messing around with it for like 6 years.
Bitcoin who didn't do squat. They opened up a Coinbase, account, and that was that. And they made lots of money. But I suspect, knowing what I know about you, that you actually did the work. You understand what's going on in the crypto world.
I got Adele, I'll tell you something funny. My wife said to me, my younger daughter goes to a private school now. Just for her, it was better, than the public school here. And so my wife told me how much it was. I said, all right, give me a week. And so I did some trades with some altcoins and some other things. And I said, okay, go ahead, you can pay the bill in full. And then she goes like, oh, wait a minute, the sleepaway camp bill is coming. I go, how much is it? She tells me how much it is for next year. I go, all right,
wait, can I call you if
You can call me, but listen, those were good. It doesn't always work out that way, but it's interesting, totally off topic, but it does trade with the same emotional patterns as the market does. In fact, I wanted to ask you, I skipped over a question I had. This is relevant to what you're saying about the long term. So yesterday, the market was down, what, 900 points? Today's the 21st. Yesterday was the 20th.
Yeah.
Right.
And
so
we're up today. Is crypto up today? It got smacked around.
It is. I bought more at 5 o'clock this morning because I bought some yesterday. I was down. I'm like, knowing what I know, it's all emotional. And I'm like, okay, there's a good chance it can keep going down. Really is. But there's a good chance in the next 1 to 3 days, I get one pop and I'll make 10 or 15%. But my question, my point was, the market was down yesterday. Does anybody really care about that if you're long-term? Did you even be thinking about one bad day like that?
Yeah, well, okay. That's a really good question. I like that question because in a sense, no one really cares about one day ever. Except that yesterday, but anybody who's serious observes every day, and it joins with the other days that you've observed and the ones that you will observe, begins to inform your investment decisions. So yesterday, and I guess yesterday was Monday, so the end of last week, right, we began to see there is a brand new there's a brand new variable that's all over the marketplace. It's what's going on in China.
That's right.
Okay.
And it could be the beginning of the bursting of the real estate bubble. Possibly.
Hello. So you just put that piece of information, not that yesterday really matters, but that you suddenly have an awareness of something that's very different going on in China, where for the very first time, we see this behemoth of a government and an economy not willing to bail out an over-leveraged real estate
they're letting them go.
And so you say to yourself, what are the long-term implications of this? Should we make, is this just a single thing? And you look back and now you see what's been going on with the Xi government for the last 6 months, a year. I mean, it started with an actress disappearing, And then, I mean, I don't know whether you remember that. Do you remember that? She just disappeared from the face of the earth for a while because she was very verbal. And then we start to see, I mean, the most recent thing was the clampdown on the video games. Certainly what's happened in Hong Kong and what we're worried about in Taiwan. All of those things are connected. To think that what just happened with Evergrande is not connected to what happened in Hong Kong would be naive.
That's right. And it begins, is it a time to begin to, to say, maybe there's a shift in what's happening. Maybe it's time to step back and look at my portfolio because there's.
So here's the
political thing happening, a global economic thing, the macro, the micro.
Here's the connection for me. I own, growth stock portfolios always have a lot of technology stocks in them. Otherwise, they're not growth stock portfolios. Right?
That's true.
Anyway, so I own a lot of chip stocks. And I own a lot of semiconductor equipment stocks, the companies that actually make the equipment that makes the chips. Well, all of the stuff that you and I have been talking about has something to do with Intel's decision very recently to spend somewhere between 60 and 120 billion or 140 billion in making new fabs outside of, in politically safe places. And that's an investment opportunity. And what I just saw happening in China just made me think to myself, what's the next derivative of this? I already own Applied Materials and Lam, the semiconductor equipment stocks. Sure. But what's the next derivative of this? Where can I go with this? Because there's clearly a very big shift going on. We saw, oh, by the way, we saw something else in the last 2 weeks, which was this submarine deal with Australia.
Right.
This is all China focused. Everything we're talking about now is China focused. So
they have a plan. They know what they're doing.
What?
They have a plan. It's very slow and steady, right? It's been going on for decades. They want to take over many things, including global currency, correct?
Well, and that's what, I'm sure you've read this article, if you're a crypto player, that in fact, perhaps to the extent that crypto destabilizes conventional currencies, that's sort of an interesting thing for the Chinese. On the other hand, the Chinese have been very anti-crypto, I guess because they can't control it.
Maybe they are, maybe they aren't, right? Publicly they are, but who really knows what they're really doing or really thinking?
What?
Publicly they are, but if you look at what governments own the most Ethereum and Bitcoin, you'd be surprised to see who they are, and it's exactly who you think they are.
Tell me who they are. I don't know that.
Well, I don't want to say something that's not correct today, but last time I looked, it was the US, China, and Russia.
Okay.
And that's not by mistake. If we were on the gold standard, who has the most gold right now? I believe it's Russia and China. They're buying it up by the tons.
Well, they own the most of anything else too.
It just gives you something to think about. Like, okay, so if they have the only thing that's ever, Robert Kiyosaki, Rich Dad, Poor Dad, his whole thing is God's money. And he's like, it's the only thing that's been around for thousands of years that will always have value and still has value is gold. So even though we're not on a gold standard since I guess Nixon did that, right? It doesn't mean we're not going to go back to it. It's just something, you don't really know what people are thinking.
Do you own gold?
I have actual gold. I buy it every month. I have a little bit of everything.
It's an interesting thing because it's
hard to get it now.
For my clients. Well, you know what? And I own the ETF GLD, which has its own problems and makes me nervous in its own way. All ETFs do. You own the physical stuff, which is probably a better way to do it. But it's an interesting. One of the things about good investing is on the one hand, always acknowledging the role of chance, and also always acknowledging, which is another way of saying, you never know what the next black swan event is going to be. That's what
Wait,
the definition of
explain what a
swan
black
is.
swan event is.
What?
I know what that is, but explain what a black swan event means.
Oh, it's in the tail of the probability curve. So it's something that, you know, somebody will tell you it's 1 in a zillion chance of happening, but it happens.
And then it's a catalyst.
So all of the planning, all of these nifty planning programs that we all use, you know, never provide for that, because it's in the tail of the probability curve.
So they can't factor in a black swan, but I guess isn't that in essence where that volatility, if you're in a way prepared for it, could make you a lot of money?
So, right. And that's one of those things that you want to talk about, or
talk to me
at the end, in the end game. So I think we all feel coming through this COVID time that we live in the most uncertain times. And I think that when we see something like this Evergrande thing happen, explode from nowhere onto the front page of the Wall Street Journal and the New York Times and whoever else is going to cover it, the Financial Times, we get a sense that life is very uncertain. And our gut reaction to uncertainty is fear.
So true.
Right. And I think that one of the pillars of good investing is, when you get scared, is to always say to yourself, I've got that horrible feeling in the pit of my stomach. Where's the opportunity?
So while everybody else is running out, you stay calm and you look where you can go in. Right.
And so, and I think it's a really important part of investing. You know, we say, for people like me who buy and sell things, you know, that's what I get paid to do, is to buy and sell things. We have certain rules in our practice, and the rules are to keep ourselves, and we think of ourselves as professionals, but we keep ourselves from the very things that you and I are talking about, not letting be our masters, which is fear and greed.
Right, right.
And
it's
so
difficult.
Yeah, it's really difficult. It's really difficult. And I think that I think it's I think it's an interesting thing, and there is an age component to it. When you're young, you are a natural risk taker, because in fact, you think it will, your horizon going forward, you think to yourself, make a mistake, I'll fix it next year.
Right.
Okay.
Right.
All right. I think about the time you're 40, and I think that's probably what a 40s crisis is about. About the time you're 40, you say to yourself, you know, it might matter what I do.
Yeah, there's not so much time. I'm on the back 9 now.
Right. It may be, it may be limited.
Yeah.
When you get a little older than that, and it depends on who you are, obviously, but there's another point at which you say to yourself, if you've been hot and lucky and you've accumulated some wealth, you're in a decent position, you say to yourself, I'm now in this interesting position. I have enough that I can afford to take no risk and make it till the end, or I have enough that I can take big risk and make it till the end.
So you're setting aside something that you know is you're good with this, and the rest you're going to play with.
And that's when you start to think for the next generation.
Yeah.
Now, you're a lucky man because you've gotten to that point earlier in your life than I did. It took me a little longer, but the fact is that and I think that's a part of knowing who you are. You know, in fact, I've had this experience in my life, 2 partners who sold a business, a tech business. They both walked away with a whole lot of money. And one of them said, I have enough that I can take all kinds of risks. And the other one said, I have enough that I don't have to take any risk and not, and they're both my clients.
Right.
Totally different approach.
Yeah.
They both obviously took risks as young men. That's how they developed this tech business.
Right. Well, it's important. The risk is I mean, my core business is a tech business. I'm not at that level. It sounds like where those guys are, but when you're an entrepreneur, anybody that we're speaking to right now that's an entrepreneur, there's huge amounts of risk you take. I mean, I personally have guaranteed many things. I've done acquisitions. I've bought all the partners out. I personally guarantee things. I mean, so what you're really betting on is yourself, and you're betting on your own ability. And they did it. I've done it. Many entrepreneurs do it.
So let me ask you something.
But the downside is huge. It's huge.
Okay, so let me ask you something.
Potentially.
You have to have had experiences where it didn't work.
Where what didn't work?
The risk you took.
I've had for every win, I've probably had 50 losses.
Yeah. Okay. And so how you dealt, what's more important, the win or how you dealt with the losses?
The only reason I have the wins is because I learned from dealing with the losses.
Exactly.
100%. There's I don't want to turn it into a conversation about me, but you're right. And you probably have many stories like that you could tell, as far as the wins and the losses,
But that's an important thing too so where we came from is to say, when there's disruption around you, it creates volatility. And the volatility is scary. It's also a huge opportunity. The second part of that is, if you think forward and you say to yourself, so what's the worst thing that can happen here? You often realize it's not that terrible. So you'll pick yourself up and you'll do something else.
And you're governed by a plan, right? So when that happens, because now this is what we're assuming. Let's say there's two people that are watching us. One person has a plan and one person doesn't. The people what you're talking about, or that we might be referring to, are the people that have a plan. So they can get up and they can dust themselves off and they can continue. And maybe there was a setback, but because they've got a framework, they've got a roadmap, they've got a plan, they can get back on the horse and they can keep riding forward and work through the temporary feeling of fear because it'll pass. Like yesterday, people will probably freaking. I have a friend of mine actually who is very close to here. When we had when was that big pullback? Was it back in May? We had a huge.
Yes. Mm-hmm.
All right. He told me, I mean, he has millions of dollars in the market. He day trades. He's my age, and it wouldn't be good if he lost his money. He told me he was under his desk in a ball crying when that was going down because he had so much out there. Talk about fear, right? Now he ended up coming out of it, and he took what he told me was, to your point, he got up. He said, "What the hell am I doing?" He went back to his plan. This is a story he told me. He went back to his plan. He said, "Okay, take the emotion out of it. What should I be doing right now?" And he did exactly what you just said. He went and looked for the opportunities. And now all these months later, I mean, he's up huge sums of money. He could have stayed curled up in a ball and been driven by fear, but he didn't. He stopped, he thought, went back to the plan. And that's what I feel like I hear you saying.
But you know what? Understand now, and I think this is the context. Your friend probably had to wait a week before it started to look like he made the right decision.
He did not know. It took a while.
Okay. Maybe 2 weeks, maybe a month, maybe. Yeah. Okay. There have been periods of time that I've lived through where it went on for months. You got smacked around day after day after day.
Oh, it was like that, wasn't it?
Excuse me?
Wasn't 2008 like that?
Yes, and because yes, and more than that, 1999 into 2000.
That was a dot-com bubble.
Yeah, it was. And, I mean, we laugh about this in our practice. We had the two most extraordinary quarters we've ever had. The last quarter of 99, first quarter of 2000. And I remember looking at my partner and saying, we ought to watch our behinds here. This just doesn't happen. And it doesn't. I mean, it was a blow off. We were watching a blow off. But I think that speaks to another thing about another precept of running a financial life, particularly if you have a family and you have obligations and stuff like that, which is there are certain basic things about life that you have to be sure you've taken care of. And sometimes, by the way, it doesn't work that way. I mean, even those get threatened. But you have to try and do that so that you can hold the line in the other part of your life. This all sounds, as formula, it all sounds very easy. When you're really there, it really isn't so simple. But the fact is that I think if you do make long-term decisions, if you do know what your dream is, that's what dream it means on our website. If you do look forward, if you begin to incorporate into your thinking that every disruption creates an opportunity, I think it becomes habitual that you make good long-term decisions.
Yeah, it's like a mindset shift, because now you're looking for the disruptions. You're looking for the quote unquote bad times. Like if you watch CNBC enough, right, you'll see they change their tune like in 2 seconds, right? Whatever the latest news is. And if you start to see that there's something bad going on, it's rather than get caught up in the fear, that fear actually in your mind should be, no, I'm not afraid. This is actually an opportunity. You just flip the script on your brain.
So where it gets tricky is something like, I was just thinking about I'm not going to mention the name of this company because I'm not supposed to do that. I won't do it. So we did a lot of work on a couple of companies. I don't know, probably about 6 or 9 months ago. And as we were finishing our work, the stocks took off. And we said, we're not going to chase these stocks. And they just kept going. Okay. They were benefiting in a very big way from the COVID disruption. And when we started talking about the end of the disruption and a more normalized economic environment, these stocks pulled back in a very dramatic way. However, many of the changes that COVID wrought and actually accelerated are still in place. And while these companies will not have the huge spurt that they had in the midst of COVID, they will continue to benefit from the longer term changes.
Right.
So now these companies have pulled back into an area, into a valuation area that make them look more interesting to me than they did 9 months ago. And we're redoing the work.
That's like the real value of, having somebody like you and your firm. Whether it could be somebody who's in their 20s, who's just getting started and looking for a plan, or 30s, 40s, now as a family, and you get to, it doesn't really matter where you are. Like, you still need guidance, because what the research you're doing and the things you're telling me, there's always opportunities, but in the midst of possibly taking chances, there's always the core game. There's always like that main game you're playing to keep growing it. What is it? Build it, grow it. Wait, what does it? Dream it.
Yeah.
I don't want to say it wrong. Dream it, build it, grow it. So that governs everything, right? So everybody has a dream, but then there's the reality of, okay, you're going to have a $50 billion house. So like, let's have a real reasonable dream that definitely is a stretch, right? It's something that's maybe even beyond what you think you can achieve. That gives you something to strive for, gives you some goals. But in order to build it, you need a plan. And everything I'm hearing you saying, it's very tactical, but it all comes out of a plan. And the plan, as you say, it depends on the person, depends on what they want, depends on how they see their life going, right? And it's like, I'm trying to imagine how people get through life without having somebody like you as a trusted advisor, how they could be successful. So you really do need a trusted advisor to guide. I mean, would you agree with that? Otherwise, how could you do anything you're saying? Nobody knows this stuff. Like, nobody knows what's going on. Nobody knows about China. Nobody knows about, oh, it's COVID, let me buy CVS stock. Like, nobody's thinking about that, you know?
Well,
When I say nobody, I mean the average person who's getting up and going to work every day and trying to put food on the table. I'm talking about America.
You know what? Okay, so the average person doesn't do the work, because the average person is going to work doing their own work.
Exactly.
They don't have time to do it.
Exactly.
Okay? All right. On the other hand, I'm going to tell you what the average person does do and what I listen to all the time.
Tell me.
The average person in their life, you know who Peter Lynch is?
Of course.
Yeah, okay. You know, he said, buy what you know.
That's right.
Buy what you know.
That's right.
The best, and this is something, hold on a minute. Leonard, do you want to get through him? Okay, my husband just walked in. So the average person knows things. Here's the joke in my family. I have a 33-year-old daughter. If she's the youngest of my children, if the moment the companies came public that she's recommended to me from the time she was 10 years old and had her first Facebook account, through, her telling me, Ma, you don't want to earn Oracle, you want to earn MongoDB. She codes, she does tech stuff. From the time she walked in with a $3 cup of coffee from Starbucks when she was 14, and
Yep.
and I said, "Are you kidding me?" And she said, "Taste it, Ma, it's fabulous."
It's also the experience of being there and the whole thing.
So
They reinvented coffee.
Here's the lesson about that for me. First of all, she is the next generation. She's 2 generations away from me. Not 1, but 2. If 20 years is a generation, she was born when I was 42 years old. So she is 2 generations away from me. And she is what the future is.
Yes.
So she is buying what she knows and she's bringing it home to me. She knows what I do. And she says, hey, look at this. What is this? Can we invest in this? And we can do it in our own lives. And I think that the way we go into the future, in part, is by listening to the next generation. I think that your children implicitly are giving you extraordinary investment information now.
Totally agree. My daughter spends more money on Roblox.
There you go.
Then you could. I mean, she's been spending money on it, and I can't. I say yes to everything because I grew up like really poor. I have nothing, so I have a hard time saying no to my kids when they ask me for something, even though I know I need to say no more often. She spends so much money on Roblox. My wife's constantly yelling at me. She's like, "Would you stop telling her yes?" And they went public, right? I don't even know what the stock is doing, but I told her that you could buy the stock, and I tried to explain to her what it was. She's 10. She didn't get it. But needless to say, over the years, all the different things that both of my kids have like talked about, many of those things have gone on to do really, really well.
And it's across all kinds of, across the whole economy. It's consumer things. It's the things that power the consumer things.
Right.
And it's a really, and each one of us, if we start to ask questions about what we know, what we use every day, how we get it, embedded in that is important investment information.
That's right.
And if you have, I love those conversations with my clients. When they say to me, if I say to them, so what's new? What are you doing? And I start to pick their brain, I almost always walk away with some piece of information that I can use.
Sure. Yeah.
So my talent is that I'm always looking, I'm always trying to figure out how to use that information to make a good investment. But the information comes from, it comes from a multitude of sources. And I think it's,
right.
And I think it's important to recognize that.
So we're touching on, from all these different angles, the things that when you add it all up, it potentially does get you to a point. And this number is different for everybody, but whatever financial freedom means. So whatever your turning point number is, right? Whatever number is your number you need to live every month. After that, you got financial freedom, maybe, if that's what you want to call it.
Have you noticed, Matt, that number keeps going up as you have more?
I'm pausing because it's over and over and over and over.
Yeah. So I think you have to be, that's a danger. It's never enough. But I think that there are basic things that you can really think about, that you can quantify. What do I need for this basic stuff? And then you can, you have a framework within which you can execute a plan and change the plan as you get older, as your objectives change, as your life and your family changes, all of those kinds of things. But I think having that plan, understanding that the world offers you opportunities every single day, and sometimes the scariest environment is the biggest opportunity.
Absolutely. Listen, if your dream is financial freedom, and I say it like that because it's most people are working and working and working, and we forget that the whole point of working, the whole point of being on this planet is to have joy and love and peace and happiness. So is that what you're getting from work? No, we're going to work trying to make money. To what end? Well, it's more than just paying bills. At some point we want to stop. And what does that end? That end is some sort of passive income, some sort of, so your dream is to have that, whatever that number is for anybody, it's all relative, and then to build it. So the building phase happens over the course of, to your point earlier, it's a long game, right? Forget the risk, the stuff I was telling you that I do. I'm willing to lose that money, but there is the core. There's that core that it grows and grows and grows. And at some point that cash flow is going to generate enough money that if one chooses to, they can stop right there, aside from inflation and things around them beyond their control, but they can stop right there and say, I've reached that point where I can keep going, but I know I can stop now if I want to. And that's financial freedom. And I think the sooner that anybody reaches that, the sooner that they begin to realize their real purpose in life is not really about making money. Money is just a means to an end. The end is happiness, but the money doesn't make you happy. The money gives you a platform where if you're a happy person, you can be happier.
Yeah, that's right. I mean, I think it
makes life fun.
It's an enabler.
Right.
It's an enabler. And I think that's, if you think of it in that context, and that also, it's important to have a plan. It's important to be flexible enough to change the plan, but it's important to have a plan.
Absolutely.
And I think that it's I think that there's never a time when you're really too young to start to do that. I always laugh because people say to me, in 1968, when you graduated from college, how did you ever decide that you were, how'd you decide that you wanted to get into the, financial business? And, how did you plan your career? Well, I wouldn't exactly call it a plan. I wanted to be financially independent. And that meant that I wanted to make it myself. I was not interested in marrying it. I was really interested in making it myself. And so within that construct, I made choices as opportunities arose. And some of them were very unexpected. Some of them I actually created those opportunities. But it's a lot of, my husband calls it ricocheting. It's a lot of ricocheting off that center line, and looking for opportunities all over the place.
That's true.
Yeah.
That's a really important point you make about creating your opportunities. I mean, it's way, way beyond financial planning and investing. We didn't get into this in detail, but whatever those things are for you and what they've been in your life, those opportunities that you've created, they weren't luck, right? Because you were prepared and you were aware that an opportunity was presenting itself. And many people, they have blinders on and they don't see the opportunities because they're just not aware of them. But it's a common, I speak to a lot of successful people on this show, and there's a common denominator from everybody I've spoken to so far. They all recognize opportunity when it's in front of them, and they're willing to take some risk, different levels of risk. And they all realize it's not really luck. You're prepared and you seize the opportunity, but then you back it all by action. You're doing something, which is the difference between having a dream and actually having something come true. You just took action.
Yeah. So, there's one other thing. There's one other aspect to this whole thing. When we made this date to have this conversation, I started to think a bit about the choices that I'd made. And I think it's really important to understand that plans never go. It never works exactly the way you think it will.
Never.
Never.
And if you embrace the uncertainty, it can be a lot of fun.
Right.
If you embrace that the uncertainty is there for a reason, and that's where the lessons happen.
Yeah.
Right?
Yeah. And
that's the spice of life, isn't it?
Yeah. I mean, anyway, I think it's a really interesting thing because, when you're young, you think that you can, you feel very powerful. The power comes from just your youth. It gives you and you are powerful.
Right.
You are powerful and you feel as if you're in control. You are in control. And then
the ultimate illusion.
Right, exactly. And then you get to a point, again, when you're around 40 years old, when you realize that you may not be entirely in control. And then when you get a little older, at least for me, what I realize is that getting up in the morning and acting as if I'm in control, even though I know I'm not, is what defines my life every day. Which I think is very much like the old existential, Sisyphus who pushes the rock up the hill. It falls
Right.
back and it just gets up and pushes it up again.
Yes, that's right. So in other words, what I think I hear what you're saying. It's like you recognize, like you know that no, you're not in control of anything because nobody is. It's not possible to be in control of anything other than your thinking, unless there's something wrong. You can control your thinking, but that's it, right? So everything else that's happening to you, around you, for you,
But
it's
it's all
all
opportunity,
opportunity,
and it's all opportunity for your
right? All of it. That's brilliant. That really is brilliant. That's
and
like wisdom. That's serious wisdom right there.
and I think it's life is very exciting.
It really is. Can I tell you something? This morning I was talking with Anthony, who you met earlier, and Carol, who you know, and via text. And I sent them a message and I said something like, I said, good morning. And I put a picture of a cup of coffee and a sun, in a text.
Uh-huh.
And Carol replied, but she's going to get mad at me. She replied back to me and she goes, it's raining out. And my reply back was, it's sunny in my mind.
There you go.
That's what we're saying, though. It's pouring outside. I don't care.
Right.
I'm looking forward to a great conversation with you today, and we've had one. So you're right. It's how you look at things. I want to we got to wind it down. I could probably talk to you for 2 more hours. I'm having a really good time talking with you. I want to give everybody that piece of valuable information, right? And whatever comes to your mind, I want it to be organic, but I want to know what you think the 4 keys to financial freedom are. And there's way more than 4, but right now, the times that we're living in, political uncertainty for sure, globally and domestically, and inflation and everything, it's all over the place. And who knows how long it's going to go on. But there's some consistency that's always true, like you've said throughout the years. So with that in mind, what would the 4 keys be to at least passive income, financial freedom, to that dream?
Have a plan. Think of disruption as an opportunity. Think long term. And never be afraid. Always question conventional thinking. Sometimes it's right, sometimes it's wrong. And never be afraid to make a change.
I love it. You just gave us 5. That's a bonus.
Okay.
That's a bonus. That's brilliant. I feel like I want to have a whole other conversation with you, like just going down one level where we actually talk about, what does a good plan look like? But then I guess at that point you'd be my advisor. But
well, I would welcome the opportunity.
Well, what I want to do is so as we wind this down, first of all, I want to thank you. Like really, this was a great conversation. And I hope that anybody that watches this now or 3 years from now, this is timeless information. And so I want to thank you for doing that. One of the things that I like to end every show with is reminding everybody, and this is, I'm sensing, even talking to you, it's so true. You have to be humble and you have to hustle, right? And it comes down to you and nobody else. And there's nothing that stops you from reaching your potential but yourself. And so that's always my final thought. But I'm going to put your information down below, your email address, whatever it is you want. I'm going to put it down below. You give it to me, and we'll put it in the description. So anybody who's watching this, if you want to reach out and talk with Adele, you'll be able to email her, call her, check out the website, whatever she gives us, probably LinkedIn. And I strongly recommend doing that, because there's a lot to be said for seeing the ups and downs of many cycles, right? The ups and downs of the market, and touching on how do you even identify what's the right plan, and then how do you play the cycles? And like she said before, they're always different. Like it depends on what's happening around you, so the opportunities are going to be different. So I encourage you to reach out to Adele.
Thanks, Matt.
Did you have a good time?
I had a great time.
Awesome. So thank you again, and we'll talk to you real soon.